All right, guys, it's official. The Nasdaq has entered correction territory, falling 10% from their record highs set back in November. We're going to talk about that and what that means for the market going forward. And then we're going to also talk about some big news from SoFi sending shares skyrocketing after hours yesterday. So stick around. Hey guys, welcome back to TipRanks. I'm Richard Allen. Thank you so much for joining me for another video. We're going to talk about the Nasdaq falling 10% since November, officially in that correction territory. We're going to talk about what that might mean for the stock market going forward and kind of whether this is, I think, in my opinion, a buying opportunity or not. So we're going to talk about that, but we're also going to talk about SoFi getting a big major designation that we're going to talk about here in a second, sending shares absolutely skyrocketing. But let's jump over to tipranks.com, take a peek at the major indices and see how they're doing. The S&P 500 down 0.97% today, the Dow down 0.96%, and the Nasdaq, like we talked about, down another 1 percentage point today, causing that 10% correction from highs set back in November. If you take a peek at the chart here, you can see, let's just go over the last 3 months. Back in November here, we saw all-time highs, and it has fallen drastically since then. A correction technically is a 10% dip in a major indice, so that's what's going on with the Nasdaq. The tech sector has been hit pretty hard as of late. Compared to the S&P, is only down about 5% from hitting highs not that long ago. Very similar to where the Dow is right now as well. So the Nasdaq, the tech sector, has been hit really hard lately. But is this a buying opportunity? Well, lately, the last few corrections that the Nasdaq has seen, specifically September of 2020, we saw a big correction in the Nasdaq. It was a big buying opportunity in the tech sector. So if history repeats itself, which it likely will, there is more room for the Nasdaq to fall in the short term, but it is likely a really good buying opportunity right now in the stock market. So take a peek at some of your favorite stocks to see if it's time to buy the dip. It's up to you. You have to manage your portfolio if you're into doing that sort of thing. I think there are plenty of deals out there on stocks. I've recently purchased more Open Door. I think it's a fantastic opportunity, falling to a 52-week low. In fact, falling under $10. Today, I bought a bunch of Open Door, so I'm really excited to add to my position and average down my cost basis. So look for those types of opportunities if you're willing to stomach some more short-term pain. At least that's what I think will happen in the short term, but I could be wrong. It could be a really, really bad dip and correction that we could see, 30, 40%. You never know. It could turn around in a couple days. It could fall a lot more. So be prepared for volatility because interest rates are rising. This year, we're going to see a few different rate hikes. We have the 10-year Treasury at a 2-year high. It hasn't been this high since December of 2019. So there are a lot of factors right now that are stressing the stock market. So be prepared for a little more volatility going forward. Let me know once you think about that volatility. Let me know which stocks you want to see us talk about here on the channel that you think are buying opportunities right now. I'd absolutely love to hear your opinion. But let's move on. Let's talk about SoFi and why shares absolutely skyrocketed just after hours yesterday, up 14% almost today during normal trading. But let's take a peek at the chart here on SoFi. If you look over the last 3 months, it's not great, guys. Hitting almost all-time highs for SoFi back here in November and has fallen 35% since then. But you see this little jump here. If we look at the 5-day period, you see this big jump here after everything was crashing yesterday. So this wasn't a surprise that SoFi was falling very hard. But they won regulatory approval to officially become a bank. So that's what happened with SoFi, but what does that mean for SoFi going forward? Many companies out there, SoFi included, relies on other banks to give their customers FDIC insured accounts. What SoFi now can do, they don't need a middleman to offer these types of services to their clientele. This is going to save them a ton of money, but offer them some big, the banking system is kind of bonkers everywhere you go, but this is going to allow them to do a lot of great stuff, even on the lending side, to really streamline their business. It's going to add a huge amount of profit to their bottom line. This is fantastic for SoFi. Now, if we take a peek at what the analysts think right now, this is a moderate buy based on 10 ratings. Citigroup giving this a $20 price target just yesterday, but $21.40 is the average, giving this a 56% upside still after these big gains over the past couple days. But what do you guys think about SoFi? Do you think this is one of the companies that should be on the list as a buying opportunity, or is it just another fintech company that's going to go through the ringer over the next couple months? Please let me know how you feel. Guys, thank you so much for joining me for another video. As always, if you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.